Hi folks. Today we're going to introduce you to an asset management business you may not have come across, Kennox Asset Management. The business was set up around 5 years ago and currently has around 270 million under management. We're joined by Charles Heenan, who is one of the 4 founding directors of that business. Charles, thanks for joining us.
Thank you for having me.
Maybe if we start by just talking about the Strategic Value Fund and what it aims to do.
Sure. The Strategic Value Fund is a long-only equity fund, so it consists of 28 equities, and we have cash. It is unhedged. We don't believe we believe our real skill lies in picking stocks, finding a good diversification across the stocks, but staying away from anything else. Having a little bit of cash allows us to really have strong conviction ideas. If we're not finding the right ideas, we have some ability to go to cash. This is a low turnover fund. We turn over the stocks maybe 15%. So we're looking to buy and hold. We hold our average stocks 5 to 10 years, and it casts off a little bit of income, approximately 3% after all fees. So nice little money to be paid to wait.
Okay, fine. So this is a fund investing in stocks listed anywhere in the world, pretty much, which is quite a busy space in terms of other funds trying to do something similar. Could you maybe draw out what you think gives you guys an edge over the rest of the competition?
Sure. Yeah, we're very conscious of capital preservation. We think first and foremost it's important not to lose money and then grow it in the longer term. So another way of looking at it is we're trying to get equity-like returns, but without all the risk. So in good markets we tend to make attractive money, we make good absolute returns, but certainly in the past we've held up much better than the market in falling markets, and it's been much less volatile. So how do we go about this? We are committed stock pickers, we're not thematic asset allocators, and we're looking for great companies that are available at even better, exceptional prices. This doesn't come around very often, so it's very much about waiting for the right opportunities. Maybe to give you an example, GlaxoSmithKline a couple of years ago was seen as a dull stock, and there was all the risk around the generics and their patents. So the share price was very depressed. Now it's become much more popular. Healthcare, they're seeing growing again. They're seeing having a very attractive pipeline, and the share price has moved up 50, 60%. So it's about waiting for those when the market sees it's overlooked an opportunity.
Okay, so it's a very much contrarian view, going against the flow.
Very often contrarian. It gives you the best opportunities at the best prices.
Yeah, great. Okay, and in terms of markets generally, clearly your approach is very much about individual companies, individual stocks, but it must give you a bit of perspective on the level of valuation of markets, and be interested to hear what your view on markets is.
Sure. I mean, we're strong believers in the long term. Equity markets are enormously attractive. They're real assets, and when we say real, we mean inflation beating. You're looking for things that can grow faster than inflation. So invested properly, equity markets are very, very attractive. Our view is that there's always risks around, and so instead of trying to predict when those risks are, if we position ourselves very conservatively, that's a very good way of dealing with any turbulence, any market turbulence, any tougher times in the market, but still allowing us to do very well in the long term. If we don't lose money in the short term, we'll do very well in the long term.
Okay, fine. Now, one of the aspects of our due diligence, if you like, before we invest in funds, we like to see that the people running the money have got their own money invested. Is that something you'd like to share with us?
Sure.
Yeah,
we're very open about that. We've been very keen, right from the founding of the business, as you pointed out, I'm one of the founding directors. We're very keen that we stay very aligned to our clients and we minimize the conflicts of interest. So we have, owned entirely by the managers. We have a clear focus on one investment business. This is all we do, is invest. And in fact, we only have one fund, so that's how much we believe, and this is the right way for us to do it. So I can happily say that I'm 100% aligned and have all of my equity, all of my exposure in the stock market is in this fund, and always will be. This is how I believe money should be run. I don't see any reason to put my money anywhere else.
Great, thank you. And finally, before we wrap up, maybe if we can just touch on a particular stock that you think looks particularly attractive in the current environment.
Yeah. We are concerned that the markets have done very well at this point. It's time to focus on not losing money, on staying rich and not getting rich. Now is not the time to focus on getting rich. So we think it's important to stay conservative. An area where we found a few ideas lately has been the energy stocks. So things like Statoil and Shell and BP and a North American one called it in Canada. So we've been building up exposure in that area. These are very resilient businesses. BP is a great example of, there aren't many companies out there that can take fines of $40 billion and still be a thriving business. BP has been able to do this in very tough times. These businesses hold up, so we think they're very resilient. They've been underappreciated by the market, and you're able to get these on 5% dividend yields. Very strong, resilient businesses at very attractive valuations. So we think that's been a very interesting area for us. Those are huge companies, obviously. Interesting. We've also, we think that matches up very well with some of our Hong Kong smaller companies. We have some small companies in Hong Kong. There's a nice blend there between the very big and the small. Those are available and still attractive valuations. They've done well, but a lot of them often are yielding 5%, and we've got one or two that are yielding significantly above that. There's a nice blend between some very big oil tankers and some very small speedboats. We think that's an attractive way to build a portfolio.
Okay, great. Well, Charles, thanks for sharing those thoughts with us. Hopefully that's a bit of interest to those watching. If you'd like a bit more information on the fund, please contact your broker. We recently added the fund to our recommended buy list. Thank you.